started. And we're officially live only on onedealaway.com/live. Welcome to another episode of Money Matters. My name is Nev, and today we have an incredibly important show. If you have ever been thinking or interested in real estate, that's right, it is Thursday, and we're going to talk real estate investing. We have all kinds of news from what the Fed was saying yesterday and has announced, what impact that has on the bonds and, of course, mortgages and how all of them are connected, what's happening in the world of real estate when it comes to evictions, foreclosures, and all kinds of important news that you need to know in order to prevent loss, protect your money, and potentially make money in all of this insanity that is going on. You know, people are talking about inflation, deflation. We're going to cover all of the stuff of how different things could potentially affect your investment. So if you are ever have been thinking about investing in real estate, owning real estate, living in real estate, wait a minute, that's like entire world. You got to watch this show, okay? Because stuff that we're going to cover here today is going to be important for you if you are a renter, a landlord, an investor, a homeowner, a person that just sees the buildings and understands what they are and what purpose they serve. And we will be covering all kinds of stuff. Before we go into our amazing stinger and then start with the show, I want to welcome everybody watching this live only on onedealaway.com. And we're going to go into the live Q&A right after the show. As always, for all of you watching this on YouTube, do me a favor, smash that like button right now. Do subscribe if you haven't already. Hit the bell button. And now, let's do this. All right, y'all. Good morning and welcome to another episode of Money Matters. And I'm not going to do a whole lot more of introductions and talks and stuff. We're just going to jump into the first news that we have, and that is with the Fed. Now, the Fed has made an announcement yesterday basically saying we're going to keep on buying everything. We're not going to touch the rates until we hit that 2% that we've been wanting. So here is what they had to say. They are basically saying an economy flattening as coronavirus cases rises. And so he was talking about how the jobs sort of reversed, but not really. They're starting to pick things up. We're seeing that the rates are not the rates. The rate of coronavirus infections are starting to rise up as well. And so all of those things combined are basically causing him to say, it's very we're seeing this flattening out. We've already seen that the GDP, more likely than not, has already dropped 35% in the second quarter. That is huge. We've never seen a drop this big in recorded history that I know of. You might have a different view and opinion and knowledge. So if you do, please let me know in the chat or the comments section, depending on where you're looking at. Now, of course, you can read all of this stuff in it, and I'm sure you've already read it and you've seen it on TV if you are subscribing to such different, medium delivery news services. The other piece that I also wanted to cover very briefly before we jump into the real estate stuff is what's going on with the stimulus package. So let's take a very quick look. And as you can see, it is a stalemate. They are stuck. They are fighting. They're going back and forth. And one is saying, well, I don't want to approve this. And the other one is saying, no, I do want to approve this. And they are now arguing about everything, whether we should be sending money to people or not, whether an employment piece should be paid out or not. What does that need to look like? Student loans, are they in? Are they out? PPP, is it in? Is it out? And it's back and forth and back and forth. And as you can see right here in the Forbes, they're telling us that basically we have Senator Ted Cruz, a Republican from Texas, saying, I'm not only a no, I'm a hell no. Thank you, Senator Ted Cruz. Ben Sassy, whatever. There are hundreds of problems with the plan, so he's not voting. In my opinion, we need to get back to the Trump economy, not the federal government trying to replace it. So he's a no. Florida is basically saying, I don't understand it. How is this tied to coronavirus? never understood why we're giving money to all these different things. Let's concentrate on solving the problems. But they're not solving the problems, right? They're not doing anything. Long story short, before you get all kinds of upset, they are not moving this forward at all. They are fighting like a pack of dogs around one piece of salami. And I mean, it's not working. And so now they're trying to introduce the new act and the new act and the new. Folks, my personal opinion is we are not going to see this go anywhere before August 7th, which means that we will be waiting until sometimes in September. Now, this doesn't sound like a big deal until we start jumping in the rest of the show, and I tell you why it's a huge deal. Water break. Hold on. Okay, so let us continue. So, anyways, you can read all about it. I'm sure you've already heard about it, but I do want to talk about the impact of what's going on with the whole piece of the Fed kind of pushing, like sharing what they have shared, how that can impact the mortgage rates and push them even lower, which is what I have been predicting now for a while. And we're going to jump and look at the mortgage rates, of course, today, but I do want to share this article with you. So here it is coming out of Yahoo News, and it's basically saying, how could Fed put rates even lower this week? And of course, a lot of the things that they're talking about here, they always do the big old introduction. Hey, we are in pandemic. The world knows. Let's keep on moving. We already know we're in pandemic. We know we're dealing with COVID. I don't think anybody's shocked or surprised. We're all dealing with it slightly differently, but we are all living through it. So one of the things is that he's basically saying no one is expecting the Fed to make any changes in interest rates. That is true. They didn't, and they don't plan to. They're saying that, hey, federal fund rates will stay close to zero at least through the end of 2022. Well, they didn't give the deadline, but they did say they're not touching the rates as long as we don't hit the inflation of at least 2%, which is their target. So here's what they're saying here. The Fed should spell out that it will not, they will hold rates down until inflation tops 2% a year, which is the central bank's target. And they did. They did say that. Prices in May were up 1% from a year earlier, according to inflation measure the Fed watches closely. If the Fed does provide a sharper picture of how long it will hold down interest rates, that's one way the meeting could push mortgage rates lower this week. And they did. They just didn't necessarily give the timeline. They're saying, look, this year is looking rough. It's not going to look any better anytime soon. And so that is kind of what we do have that, hey, we're not touching this for a little while now. Fed officials don't directly control mortgage rates, true, but their actions and statements do have a strong influence, also true. 30-year fixed mortgage rate dropped to an eye-dropping low of 2.98% on average, according to Freddie Mac. But we're going to see it actually gets a little bit better, and it's going to continue better. Sort of. I don't know. Depends on what your view of better is. Buying up treasury bonds and mortgage-backed securities, which are home loans bundled into investment similar bonds. So it has been doing that, and it will continue doing that. They actually did announce that. So they did specifically say they continue. Now, if they continue to they plan to keep up those shopping sprees. So, and they are. If the policy panel gives a bleak description of what COVID-19 is doing to economy, which they did, investors could look for safety for their money by piling into treasury bonds, which they are. The demand would push bond prices higher, bond interest would tank, and so would the mortgage rates. And guess what? People did go into the treasuries even more, and the bond rates did go down, and the prices did go up. So it is reasonable to expect that mortgage rates will go even lower. How low can you go? Well, we'll find out, but it will go lower, and I will show you in just a moment. Borrowers already can find 30-year mortgage rates as low as 2.5%, but you have to shop around to find them. And again, I agree. All you got to do is just basically make sure you look, make sure you connect with multiple mortgage providers, mortgage servicers to find out the best rate for you. Don't just stick with one. Now, I know that a lot of times borrowers are sort of worried that, hey, if I go and have multiple banks pull my credit, which they will in order to give you the rates and pre-qualify you and that kind of stuff, that folks are afraid that it's going to ding their report. Now if you do the credit pool over a long period of time, say over the course of like 3 months, and you have the dings all the time, then that will absolutely lower your score. However, if in a course of say a week, maybe 2 weeks, you hit up 20, 30, even 50 different mortgage providers, and they all run the credit because you're shopping, that typically does not affect your credit score negatively because you're doing it in a short period of time. And so what they do is they look at it, they see it, and they say, well, this person is clearly shopping for a mortgage, clearly shopping for a home, so we're not going to take that as negative. Now if you do, a week in June, a week in July, a week in August, a week in September, then it is negative. But if you just do it one time, then it's not. Another solution that you could have, which might not be the worst idea on the planet, is to find a qualified mortgage broker or a couple qualified mortgage brokers to have them run it, because what they'll do is they have a few different sources of whom they work with, so they will kind of run it once for all of those different sources and bring you more. So what I'm saying is that you could have potentially, I don't know, 5 mortgage brokers that you decide you want to work with, right? And all of them could have like say different 10 different providers that they work with. So you could have 5 of them pull it, 5 people you work with, but get 50 different rates and be able to shop for the best rate. That is one of the ways that I think is going to be a great way for you to look up for the mortgage rates that you might qualify for. And again, not a financial advice. Any of this stuff that I'm saying is just my way of thinking. Do your own thinking, do your own research for what makes the most sense for you, and then follow that up. I always tell people, don't be watching somebody random on YouTube or even their own channel, including me, and then just blindly following them. You gotta do your own thinking. I'm just here to provide ideas, news, that kind of stuff, so that way your thinking can expand, you get more ideas, and then you can go and connect to things that make sense to you. All right. Now, here we go. These are the mortgage rates and primary mortgage markets. 30-year fixed today is 2.89. Remember, we talked about only earlier this week is 2.98. It's 2.89. Yesterday was 2.92. It actually has dropped, and I do think that it will probably, most likely, continue to go lower. 15-year is down to 2.5. FHA 30-year is 2.38. Hello. Remember how I told you we're going to hit 2 and possibly below 2. And, this one right here is pretty darn close to 2, and it might go below. We'll see. I don't know for fact. Okay. Jumbo 30-year fixed 3.75. 5-1 ARM is 2.75. So ARM is finally below 30-year, at least from this report. What I have found is that when you're looking for the averages, there are many different places when you type in mortgage rate today. You're going to get all kinds of stuff, and you're going to get many, many different sources that are going to give you very drastic average range. The best thing that you can do is find out what that rate is going to be for you. And we just talked about how you can actually do this. Now, I do want to look into kind of where we are with the rates right now. So you can kind of see right here the chart. Sorry, water break again. And as you can see, we are down well below the 2016 level. Now, they're having 30-year. Let me see additional charts. Let's see if we can get it. Oh, there we go. Look at this. Isn't this exciting? This is very exciting. I don't know about you, but it's very exciting for me. So here we go. This is what you can see that we've been seeing. Now, this is since 19, let's expand. There we go. So as you can see, remember how I told you a little while ago that rates were like, up 18, 19% in the 80s? Well, here's the proof. Nev did not make things up. Since then, can you spot the trend? It's very, very clear. Now, we do have a little bit of a bump and down and up and down and up and down, but I do expect this to keep on going down. And guess what? One thing that is has very, very similar charts, and I recommend you look it up if you haven't already, is bonds. Bonds are following very, very similar things. So guess what? They are very much connected. And so, one of those things to kind of pay attention to. And this is one of those things that is kind of interesting. Now, we're going to receive some potentially conflicting information when it comes to real estate. One of the reasons for that is because real estate, as you know, is very localized, right? It's cyclical, of course, but it's very localized as well. And so, what that means is that, on one hand, you get news like this: we are running out of homes for sale in Lake Tahoe. So Lake Tahoe is basically properties are getting snapped up left, right, and sideways, and they basically have like almost nothing. I mean, they are down. They don't have many properties left for sale. People are writing all cash offers, sight unseen. Now, this is a bubble. I've been saying that this is a bubble. Now, when we get into the bubble, we never know when the bubble is going to pop. There's benefits to this stuff. There's downsides to this stuff. The benefits is that right now the real estate market is very, very hot in vast majority of areas. Not everywhere. We've covered some of the areas where it's not so hot. Typically, major metropolis where we've seen a lot of problems and trouble. However, everywhere else the market is picking up and it's hot, 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 hot. So, what we're seeing is that when we start seeing all cash offers, sight unseen, waive the inspection, waive the appraisal, waive the everything, that is a sign of bubble. We haven't seen this since about 2004 and 5. Something to pay attention to and understand. Now, do I still think that you could make money with real estate? Absolutely. I just wouldn't be in a traditional market. I am not going into a traditional market and buying. I have received so many offers to go in and buy stuff, and I refuse to play in this market. I am watching it. I'm watching it very carefully. There are areas where I think are going to do incredibly well. Those are going to be outside of major metropolis, at least for a little while. Where I think is going to make a lot of sense in relatively speaking near future, not this year, potentially 2021, maybe 2022 or beyond. We'll see how the virus, the pandemic, the laws, all of that stuff kind of plays out. Without that, it's impossible for me to understand exactly what's going to happen. For example, if the mortgage moratorium, for example, right, is not going to be expanded and it's going to go away, then the rollout of all of that stuff is going to go out much faster. And we're going to talk more about it in detail today, in today's episode. That's right. Now, same thing goes with evictions, right? Evictions, we're going to talk about more about it. But if there's no sort of extension on some of those pieces, then I could see vast majority of the homes kind of getting emptied out on the rental side. So that also could be problematic as well. But if it gets extended, then the deadline or the timeline shifts as well. I don't know what news or laws or any of that stuff are going to happen. Nobody knows that stuff. So that's why I don't know the exact timeline. But if I am able to go in and buy something in a metropolis that is going to be, I don't know, a fraction of a fraction of a fraction of the value of the property, it might be a good time to buy. Now, people are talking about inflation, deflation, and how that works out. Deflation could be good, could be bad. It just depends how you look at it. In deflation, your money is valued much more, but your debt is much more burdensome. Now, our current financial system is derived off of debt. We print money into existence, basically borrowing ourselves into it, and as such, deflation is highly problematic for the current financial system. Inflation is much better because it eats at that debt, and what it does is that over time, that debt becomes easier to handle, easier to pay off, especially when it's a fixed rate. which is the reason why I always tell everybody you want to have a fixed mortgage rate, 30 years, 40 if you can find it, which you can't really for non commercial. They don't really exist yet, but could they? Hey, anything is possible. Anything is possible. So you want to have it for as long as you possibly can, for the lowest rate you possibly can, and you want that rate to be fixed. You don't want it to get adjusted. Now, let's go in and play along the scenario of we are now in deflation. We're trying to print, kind of restart the economy, restart the finance, get that inflation up to 2%. There's a high probability, many people, many economists, many really smart people in the market are arguing that we're going to overshoot it because government typically overshoots it. They either under or they over. They're never accurate. And, it's really hard to be able to do that stuff anyways. So what they will likely do is print. It's not going to do much of anything. We're going to experience in August, especially, and I'll explain why in a moment, of some potentially troublesome times. One of the reasons for that is because this new stimulus thing that was going to fix some of the challenges for millions of Americans are not going to come until at least some point in September. That is going to make August an incredibly painful period in time, and it potentially will make what comes out in September a much larger stimulus package than would have ever come out had could they have agreed upon over the next what we have a week, not even, because what they go on vacation on the 7th, right? Hold on, I got to take my handy dandy calendar to understand as to what's going on and where we are. So it's July 30th right now. So basically, yeah, we have 8 days. 8 days from today for them to agree on something. And I have very, very, very hard time seeing that they would, given that now they're saying, forget it, we're not voting on this bill. We're going to roll out a new bill. So now everybody's coming up with the new bills. 50 new bills doesn't make one that people can vote on. We'll see. Miracles have happened in the past. It could happen. There's still a little bit of time. But if they don't agree in 8 days, we're going to experience a world of hurt because people won't be receiving extra pay and eviction moratoriums and all of that stuff have expired officially last week. People are filing for evictions. We're going to talk more in detail as to what does that actually mean for you and for everybody else. So when all of that stuff happens and they end up printing even more money, putting stuff out there, and we see the velocity of money start to pick up, and velocity of money will pick up for a couple of different reasons. One is that if people start getting steady checks over and above of what they're used to, like we've seen with unemployment of that extra $600 that some folks have been getting, and they have been going out there investing and doing stuff, right? Consuming different products and services. But I think we're going to see more of it when UBI, Universal Basic Income, rolls out. So that $1,200 check that they're talking about, oh, you're going to get it one time and you're going to get it one time. That doesn't do anything whatsoever for economy, but the government seems to not quite understand that. If they were to roll that out on monthly basis or weekly basis or however, some sort of regular schedule, that gives more confidence to individuals. And when they roll that out, which could be a possibility, not completely out. I know they're not talking about it right now, but I am talking about it and thinking about it right now. If they were to do that, we could see the velocity of money start to pick up. When the velocity of money picks up and we start getting all of this extra money being printed out, we can see inflation start to tick up. The problem is that they might actually go into overdrive because what they're doing right now is not doing much of anything. It's sort of like, sort of pushing, a giant rock with just like a little bit of effort. What they're going to need to do is get giant leverage, then shove it. Unfortunately, once you shove it over the ledge, it keeps rolling at its own pace until it goes down to the bottom and crashes with a large boom. When that is to happen, we could have inflation that is going to be way more than 2%. Could it be hyperinflation? Sure. We talked about it yesterday. It's happening in many countries, and we're seeing that stuff. But hyperinflation and inflation, while not so good for everyday living, and it has its own problems and it's very troublesome, does have huge benefits to owners of real estate that are leveraged. Remember, I talked about how inflation eats at the debt. The higher the inflation, the faster it eats the debt. So, if you're able to go in and you borrow intelligently, and there is a probability more likely to go into the inflation than the deflation, owning real estate with leverage, meaning with mortgage that is fixed, could potentially help you pay off or completely eliminate all of the debt while helping you keep the property. Now, of course, we don't know which direction the things are going to roll out, inflation or deflation. So there's risk there, right? We all can agree to that piece. We also don't know what the governments are going to do with the taxation. Could they increase the taxation on property? Absolutely. And if we don't experience some of the other changes, we could see large problems. So there's always risk. And what you need to do is evaluate the risks on your own end of what makes sense for you and where you think things are going to go. We are going to continue to talk about the news and updates about, what's happening in the economy, inflation, deflation conversations, printing, money velocity, all of that stuff. So stay tuned in with Money Matters to help you start thinking through what would be the most likely scenario. I don't know any of this stuff. I don't know how it's going to play out. My crystal ball, as I always remind you, broke years ago. All I can do is just think through different scenarios and start thinking in probabilities of where this could potentially go. And that is the best way and the only way that I know how to think through this stuff. And so that's one piece that I recommend that you do as well. Water break. Maybe I should stop announcing water breaks because you can actually see me grab the bottle. So that's kind of where we are and things for you to think through. And hopefully this was helpful to you. And if you have learned something new and watching this on YouTube, I think now is probably a good time to hit the like button because I don't know that very many people are breaking this down to you the way that it's going to go. Now, we did talk about the whole eviction and that kind of starting up. So we do have some news and conversations about that. So COVID rent relief, what we know about the eviction moratorium and your August 1 rent check. So, well, we know that there's not much happening, right? 40, as many as 40% of U.S. renters are at risk of losing their homes in the federal eviction moratorium established by the Federal CARES Act and is not extended or renewed. So, and they haven't done that. The new stimulus package is supposed to talk about that, but they haven't done that because they haven't come up with it. So, as I have said, I do expect that they won't before they go on another recess, and so this could be potentially very troublesome. Eviction notices are now legally allowed to proceed, and evictions can begin starting August 24th. Now, before we continue on, there's news coming out of because even though the federal doesn't necessarily put it in, right, we are seeing some local governments putting in executive orders. And one of those is Governor DeSantis extends temporary ban on evictions until September 1, and this is coming out of Orlando, Florida. The executive order from the governor, Ron DeSantis, to temporarily suspend all evictions and foreclosures for non-payment related to COVID-19 has been extended until September 1. Tenants will have to pay the back rent at some point to avoid eviction, which they likely won't. I mean, you are expecting them. So this is just a can being kicked down the road. That's all it is. Because if they couldn't pay 1 month rent, how are they going to pay 3, 4, 5 months of rent in the back pay with the current rent, right? It's the same problem that I explained to you a little while ago when we were talking about the forbearance component, the challenge with that piece. The same is going to be true here. But let's continue. A tenant who can't pay rent after the executive order is lifted should contact their landlord and ask for extension on rent payment. I highly doubt that they will receive it because this landlord needs to pay the mortgage and they can't pay the mortgage unless they receive the rent check. Do you understand how this is connected? People try to make it's one versus the other, but it's not. We're all in it exactly the same and equally. So if the landlord doesn't get the check from the tenant, they can't pay their mortgage. The bank is basically saying, well, the government said I can't touch you until September 1, but September 1, I am definitely going after you because I need to collect it for my investors and my own balance sheet. The landlord, understanding that they're getting squeezed, is going to the tenant and saying, look, I'd love to give you an extension, but I can't because my bank is not giving me an extension. You got to pay or move out because I got to find somebody who can pay so that I can catch up on my own mortgage so that we don't lose the house altogether. The tenant ends up paying first, landlord second, banks third. And if there's anybody to be saved by the federal government, well, it's going to be the big banks as always. But let's continue. Landlords can still evict tenants for non-COVID-19 related reasons. Well, that makes sense, but it's one of those things that people go in, you go into the court, so who knows how that is going to play out. Let's continue with the original one that we talked about, evictions, and what does that actually potentially look like? Short-term extensions of the federal eviction ban is in the works. It is, but it's stuck. Meanwhile, some landlords have already reportedly filed for eviction in violation of the law even before the protection ended. And I told you some of the states have actually allowed for this stuff to happen, so they already have begun in preparation for what's happening right now. So this is one giant tsunami that is happening now. This is sort of just a portion of the tsunami. We're going to go into a very important news report right now to talk about the additional tsunami that this particular report that we just touched on did not cover. And here we go, like nothing we've ever seen. Eviction wave is coming to these states. I think it's coming to all states, but there are certain states that are going to come a bit faster than others. The eviction moratorium expired last Friday. That's right, the 25th, nearly 4 months after the U.S. economy effectively shut down. 12 million renters are all behind on rent payments because of the virus induced recession and now at imminent risk of getting booted to the curb. Some 25 million Americans will no longer receive their weekly 600 federal employment checks. And I'm actually going to say, because we've seen some of the reports, it's not 25, it's actually closer to about 32, 33 million. That's a big difference. Remember, we talked about it. And if you haven't seen that episode, roll back in on the YouTube on Money Matters, and you'll actually see what we talked about and shown the proof for it. In 2016, there were 2.3 million evictions for the whole year. That is what could be in August alone, 2.3 million evictions. That is huge. On Sunday, food bank lines reemerged as people's benefits ran out. Household pulse data from mid-July outlines an even gloomier rent crisis unfolding. They have found that some states will be hit harder than others, as always. West Virginia is estimated to have the highest share of renter households facing eviction, close to 60%. Tennessee, Minnesota, Mississippi, Florida, and Louisiana are all amongst the states set to be worst impacted, with shares at 50% or higher. And then we have places like Vermont, where the renters will be lowest risk of eviction, although about 22% of them will potentially lose their home over the course of crisis. Okay, we're going to pause here for just a moment. We're seeing that 60% or so is going to be on the highest range and 22% on the lowest range. Those are huge ranges. Those are huge ranges, and there's going to be many, many people that are going to lose homes. Now, how does this play out actually for all of us, right? If you think about it, when you have all of the homes and 60%, anywhere between 22% and 60% are going to be basically lost and vacant. Now, that's not all going to happen in one day. What we do expect, what I expect that is going to happen, is that there's going to be a bit of a gridlock in states where the eviction has to be a court process, where you have to go to the court. courts are going to get locked up. So we're going to see a longer period of time before all of those evictions get processed and kind of go through. Remember, they're already backlogged because of the closures, because many of the courts have actually been locked up. So they're dealing with evictions back in like March, April, May. So they're still playing the catch up. So in those states, we're going to see this stuff not start rolling out until sometimes in September, October, November, right? That kind of stuff. And we'll see if the moratorium is going to come or not. So that's on one hand. On the other hand, we have states where it's much easier and it's not a court necessarily process. It's just you serve and that's that. And as long as you fulfill the obligations, you can legally evict. Sheriff will come in and basically help in the eviction process. In those states, in those locales, we could start seeing massive evictions start rolling out as early as August 24th, 25th, 26th, right? So end of August. So we have about a month before we receive news and information as to what happens. And again, all of it rides if the local governments don't put a pause on it. Some will, some won't, and also depends on what will happen with the federal component, which, as I have mentioned, I don't expect them to have anything until sometimes in September, maybe even October, if they're just as stuck. And as we get closer to the elections, you could see this get even more political, which is going to get it even more difficult to actually move and do something. So that's something for you to definitely, absolutely pay attention to. Okay. Now, over 40% of US renters now at risk of eviction. And here is the estimate share of renters households facing a rental shortage potential eviction. Yellow is in 20 to 29%. Orange is 30 to 40. Red is 40 to 49. And deep red is, or that dark sort of burgundy color, is 50 to 60%. I'm going to take some water. You take a look. Okay. As you can see, we have Massachusetts, Vermont, Washington, and Utah as the only states that are going to be below 30% as of right now estimates. And then we have Minnesota, West Virginia, Tennessee, Mississippi, Louisiana, and Florida that are going to be in that 50 to 60% range. And then everything else as well, everything else. And as you can see, it is very, very, very painful, and it looks very painful over the upcoming months. Now, the news that you need to know and understand, and what they're sharing here, is that the administration does not have the tools to solve the crisis. Fiscal and monetary policy can only delay round two of the economic crash until after the election. So if they push it, they are not going to give this sort of forbearance or moratorium or whatever for forever. They're going to do it for a very short period of time. Like I have said before, I'm going to say it again. The absolutely only way is to wipe everything out or pay everybody out. They're not going to do any of that stuff until it's too late. But at some point, they will do something, because I will tell you one thing. When people lose their food and they lose their jobs and they lose their income and they lose their home, they lose it. And so if you thought that these riots that we have seen are a big deal, you have seen nothing yet. This is revolutionary of what's going to happen. And I don't mean revolutionary in a sense of, you know, we're going to get this like super new bright idea. I'm talking about like an actual revolution, uprising, people getting fed up, literally speaking, and wanting major change. And at that point, we're going to see some major change happens. Until then, not much is going to shift. So, and that's kind of where I fear that this is going to happen. I mean, look at this stuff, y'all. Look at this. I mean, this is everywhere. Alaska, Hawaii, California. It doesn't matter where you are. And here's the other piece. This is not just in the United States. This is happening all over the world. And I think it is important aspect for you to understand and acknowledge. Now, we also talked about what's going on with foreclosure. And so foreclosure right now doesn't look like a big deal. There's not many news happening, but a lot of it has to do with these foreclosure moratoriums or pauses or whatever, right? And these are not indefinite either. So what I decided to do, I said, well, if this is what's happening on eviction side of things, what is happening on the mortgage side of things? And we got news for that as well. 165,530 U.S. properties with foreclosure filings in first 6 months of 2020 hit all-time low. Interesting. Now, you would think that right now, with all of this stuff happening, that we would hit the all-time high, but that's not the case. Well, why not? Well, remember, they actually did put this giant piece where like nobody's going to get evicted, nobody's going to get foreclosed on, none of that stuff is going to happen, and so everything is sort of papered up and everything looks pretty on the surface. But underneath the surface, there are giant problems because again, if many people are at point of potentially being evicted, there's also many people at a point of potentially being foreclosed upon, and that is just being delayed until fall or spring of next year, where unless new laws, new rules, new things that we just talked about as the potential of what the government might do, we're not going to see that yet. That tsunami wave is only coming. But right now, the sun is shining, the birds are chirping, and life is beautiful, so to speak. Mid-year 2020 U.S. foreclosure market reports, which shows that there are a total of 165,000 U.S. properties with foreclosure filings. Default notices, scheduled auction, or bank repossession in the first 6 months of 2020, down 44% from the same time period a year ago, and down 54% from the same time 2 years ago. So you can see right here that it's actually been going steadily down from what we've seen. But I think these numbers that you see here, 2008, 2009, 2010, expect that times 10 to start hitting in 21, 22, 23. So that's what I'm saying. I could see this sort of prices and that kind of stuff happening in the near future. Now, they're tied down to lows not seen for at least 15 years, as the federal government has banned lenders from pursuing most delinquent loans until at least end of August 2020. Distressed property volume is almost guaranteed to increase significantly once the moratorium is lifted, because millions of Americans missed their mortgage payments in June and will continue to because of unemployment. But now everything is on hold, and for foreclosure numbers reflect that pause. Now, key component to think over here is we just talked about eviction won't start happening until end of August. Foreclosure won't be happening until end of August unless something big change. And again, don't expect it to do so. But let's continue. Uh, Distressed property volume is almost guaranteed to increase significantly, since we already talked about it, but everything is a hold. We already talked about that. States with the highest foreclosure rates in the first half of 2020 were Delaware, New Jersey, Illinois, Maryland, and Connecticut, even though they're down. Among the 10 highest nationwide were also California, South Carolina, sorry, not California, South Carolina, Florida, Ohio, North Carolina, and Georgia. And there's all kinds of stuff over here, but I think just highlighting important aspects here. The lender foreclosed REO on a total of 37,917 U.S. properties in the first 6 months of 2020, which is down 44% from a year ago, and to the lowest 6 month total since we began tracking in 2005. So we've never seen this low before. Now, second quarter of 2020, a total of 30,656 U.S. properties with foreclosure filings in second quarter, down 80% from previous quarter, as well as a year ago, to lowest quarterly total since first quarter of 2006. Final piece, I think it's a final piece, yeah. Property foreclosures in the second quarter of 2020 took an average of 685 days from the first public foreclosure notice to complete the foreclosure process, up from 673 days in the previous quarter, but down 716 days in the second quarter of 2019. We're going to pause over here and talk about what does this mean. So, as you notice, we are now on pause until end of August. After that time goes, and we hit into September and we don't get any new rulings, which doesn't sound like anything is going to come, the banks are going to start rolling this and we're going to start seeing notices start to hit the market. Now, they're saying an average is 685. So that means about 2 year delay in all of this processing. So what does that mean on average? And of course, different states have different rules. Some, again, have the court there are two different types of foreclosures that you can go through. One of them is sort of that like a civil, whatever, it goes much faster. Foreclosures can be done in a few months. And then you have states where it has to go through a full blown criminal kind of proceeding through the courts and that kind of stuff. And in those states, it could take 3 to 5 years to foreclose. So, in states just like eviction component that we talked about, in states where it's a much faster, we could actually see that the foreclosures will start hitting the market and hitting the news and everything else. I would say spring of 2021 at the earliest, and going on into spring to fall of 2021. Those are going to be the soonest, and then 22, 23, 24, we're going to see the knock on effects of all of this stuff. So as you can see, real estate, unlike stock markets, is a much longer period of time for things to unfold, and this is where things are unfolding. And final piece of news that I wanted to share with you is a little bit of more prettier news, more exciting news for folks about it. And we're going to end it on the exciting news. And it has to do with real estate and crypto at the same time. Dutch regulator approves tokenized real estate crowdfunding platform. We have a Netherlands financial regulatory has approved the blockchain-powered real estate crowdfunding platform Max Crowdfund. And they are a blockchain-powered real estate crowdfunding platform connecting property developers and investors, and they have received approval from the Financial Market Authority in Netherlands. We will commence the platform rollout in partnership with distributed ledger technology provider Gelurida. I don't know how you say this. I don't. I've never heard of this one before. If you have, let me know, and also let me know how do you pronounce that. Platform seeks to democratize real estate investments with investors to gain exposure from as little as €100 or $117.50, which of course changes all the time as the currencies go up and down. Developers and investors are able to raise money from the public using the platform and can pitch to international audience. Platform is the first of its kind to be greenlighted by the Dutch financial regulator and will be available as an app in both iOS and Android. So it's another crowdfunding piece where you're going to get a small portion, a fraction of a fraction of a fraction of a property. I don't know exactly how it's going to play with the taxation. I don't know how they're going to structure. It just depends on are you on the debt side, equity side, or both. So all of those components are going to play a big factor of whether there's some benefit or merit to it or not. It should be very similar to some of the platforms we've seen here in United States. Fundrise, I think, is one of them that I can mention on top of my head right now. But the difference is that this puppy is on a blockchain. We do have some other blockchain platforms that kind of do the similar thing here in US that if you're interested in doing. But again, most of it, I don't know how much benefit you get from the taxation and stuff. But again, it's just another alternative to owning physical real estate and another alternative to REITs. Well, this wraps it up. And as you can see, it was a chock full of information that hopefully you have enjoyed and that you have learned something new. I thank you so much for watching. If you have enjoyed the show, do me a favor, hit the thumbs up right now. Help me out by spreading the news and helping the algorithms tell, hey, this guy has some good content and I learned something and enjoyed it. And do come back tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.